Hello and welcome to Real Day Trading. Time number 5 that I'm doing this video because I can't seem to talk today. I don't know why, but everything I say comes out like blah, 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 so I can't talk. But you know what? I don't care. We're going to finish this damn video, and if I screw up and can't talk, you're going to have to deal with it because I'm not doing another. No. So let's get started. First, 5K account. Where are we? 4,500. Up from 800. How did we do that? The new method. It seems to be working. And working really well. Now, let's be clear for everyone, all the new people that might be listening. Here is the challenge. How does someone who has PDT restrictions on their account, meaning you get 3-day trades every 5 days, you have a margin account and under 25,000. How does that person grow an account? How do they trade it and grow it? Because guess what? People who do not have at least 25,000 in their account are losing money left and right. Oh, I have a cash settled account. Great. You're losing money. I use offshore. You're really losing money. I have 4 Ameritrade accounts and I, use 3-day trades in each. You're insane and you're losing money. No. Stop trying to find the shortcut. The method that we teach works amazingly well for anyone who has over $25,000. We see it. I see it every day. People who were struggling traders now have quit their job and they're full-time traders. They're making profit, and I'm watching them do it. I'm watching every day in the chat rooms, them posting great trades. Hell, I'm even getting some trades from our members. Fantastic. But everyone else, they're screwed. So I thought, all right, I'm going to do a 5K challenge. Great. Took 3 days, done, out the door. But then everyone was like, yeah, but the market was on cruise control. You could throw a dart, hit a stock, buy a call, go to sleep, wake up, you finish the challenge, right? Well, I realized, yeah, you got a point. Didn't take much effort to do that. Well, can you do it again? Sure I can. Hell yeah. Boom, Buzzsaw. Blah. Nope, can't. Well, I'll try it again. Why not? Yeah, but again. So I realized, okay, I've tried balancing, I tried butterflies, I tried debit spreads, I tried all these different types of techniques to see what could work. And they didn't. I even screwed up a bunch of times. That didn't help too. But mainly, I went back and saw if I can day trade those accounts, they'd all be doing fine. I'd be well over 25,000 in these challenge accounts if I could have day traded from the beginning. But I can't. So that's when I set out to I got to find a consistently profitable and repeatable and teachable method. Because it's not fair. It is not fair that people who have money have opportunity to make more money, and people who don't do not have the opportunity. Now, if you have the opportunity and you screw up and fail, that's on you. Sorry, you couldn't do it. But you should have the opportunity to create your own wealth. You should have the opportunity to be financially independent. And right now you don't. And so that's why we're doing this. That's why I am doing this. To find a way to give you that opportunity. And then when it's done, I will never trade a PDT restricted account again. Oh my God. Okay. So we did find something. We found something very effective. I always knew, and I was introduced to algo lines by Dave Wise. And at first they appear like trend lines, right? And trend lines, if you go to something like Amazon, trend lines are, delete those. Trend lines are easy. Oh, look, we have a upward sloping channel right here. Connect those. And one right here. Okay, we have a nice corridor. Stays in. Here's the problem with trend lines. Trend lines only work as much as other people are following them. Institutions are following a different kind of trend line. They're following an algo line. Those are the lines that algorithms are programmed, their buy and sell orders based on the price points along those lines. They start with a high volume candle, let's say right here, right? That's a high volume candle. You want one that is, here's another, here is another. You want candles that have above average volume and are not from an earnings date, right? So here's one right here, slightly above. And if they cross through another candle, like right here, you'll see this line is going to come right across, but here, right on this candle, now the line is invalid. Once a candle breaks through it, the line is gone, you got to start over, right? If you went from here and you went up through here, like this, well, now you have to erase that line. These are not even qualified as algo lines because these aren't even above average volume. In fact, right now on Amazon, you cannot draw an effective algo line. The last bunch of the low volume days, the most recent above average volume, see, can't talk, right here, and that would go way here. The slope is too high. That's another thing, the slope cannot be extreme. High volume candle, slope cannot be extreme, cannot be on an earnings date. It's very different than a simple trend line. I wanted to also see though, look here, that was COM, so let's take a look at INTC. Shorted this today. If the price point created by these algo lines remains, even though the lines themselves may no longer be valid. Here you have INTC. We shorted this today. Here's your first algo line. It's coming down, right? It hits this March 23rd, acts as resistance, but then breaks through it here. Now, technically, this line is now no longer valid. Here you have horizontal support, resistance. Coming across. Once again, same candle invalidates it because it breaks through 2 points of resistance here. Finally, you have this one here, upward sloping trend line, and it stops right there. Now, if we did not invalidate these two lines, you'd have a very clear price point met by both of them at 49.10. If these continue to get extrapolated out by an algorithmic trading program, and even though they get invalidated by these candles, their extrapolated price points, where do they meet, becomes a valid buy or sell point of support and resistance. That then is an extremely important piece of information. So here we are acting as if 49.10, this is where it met, is the algo price point. But what I want to do is rank them. So this would be an algo price point with a false intersect. So technically this line should not be here. This line should not be here. So we have a false intersect here because they were invalidated lines. So that is one price point. The other is going to be a price point created without a false intersect, a true price point line. And as you'll see, there'll be other types as well. Here you also have descending and ascending lines meeting rather than just a horizontal line and an ascending line, or just a descending line and a horizontal line. So there are various different types that we also need to go through. So that's INTC. We did short it in the account, and we shorted it right there. We also have FTX right there. Here's a different type. So here, starting up here, coming down, hits this, and now here it crosses below it. right? This was acting as support, as resistance, and then it gaps up and did not act as support. Here, this one clearly acting as support all the way up the line until today, where it fell below it. So you have two drops below algo support, which crisscross right there at 229, somewhere around 229. That is a different level of algorithmic price point, 229. Probably more powerful than a false intersect. But we are going to start labeling them and ranking them in terms of their ability to hold the price. Let's take a look at another one. So we took a chance on Microsoft today. Now here we have upward sloping trend line, very clear, right? Not trend line, sorry, algo line. This is an algo line because you have above average volume, not earnings, and it does not cross through anything. Perfect. Also have here horizontal support. So this is your trend line. It's horizontal support, but because it starts with an above average volume candle, it's also an algo support line. Well, support here, it was resistance here, right? They meet up, and this horizontal line of resistance and then support becomes a price point at 35.50, 305.50. So if you look here, it held the price today on Microsoft, even though SPY was dropping like crazy. Microsoft did not go below that line. But then it comes up, and all of a sudden here it drops below it. So over here, I bought a Microsoft call for next week. Not because Microsoft was doing well today. It finished up, but mainly because it had such strong support. And out of all the tech stocks, it had the most relative strength. But then here I got a little worried because it fell below. And so I quickly tried to cap the gains by selling the 307 calls against my 302 calls. And of course, what happened? Jumps right off that line. That tells me we're on the right track, by the way. So I grabbed a 315 call just to be able to capture some of the upside that I lost by selling the 307. But there is a different type, another type of line here, another type of intersection. Well, let us look at the next one. Let's see. Philip Morris. Okay, this one here reminds me of FDX because we have one downward, one upward, and we have a cross right here, right? And that is a price point at 95.66, right in here. There's your price point. It jumped over that. However, some resistance at this level here. All right, it didn't seem to care much about the 100 SMA, and the 100 SMA was at 96.95, so that's right around here. It just kind of blew right through it, but it hit up against this line here, which I think is doubly reinforced by the 200-day moving average. All right, so we have, because you could probably make a downward sloping line right here, connecting, and it'll come right in with this one. And you can do the same here and connect it, come right in there. This becomes 98.08, becomes your price point for Philip Morris to get through. So now I have a stock that is strong. It broke through its original algo price point here. And now it has this one here. If it bounces down off this price point, I have enough gap here in price that I can take gains. If it goes through it, I get even more gains. So that was my thinking with this trade. By the time if it gets rejected here again, it's going to test this again, I can take profit. If it doesn't get rejected, I can even add to the position. Okay? Let us continue to Geo. And Geo here, we have horizontal or downward sloping, meeting it to this price point, which is at 663. It finishes right at it, 664, 663. That's where the stock is right now. So I like the fact that it held a lot of its gains here. This is after hours trading, but it's pretty much, see that spread, 626, 664. It pretty much finished right around here. So it held all the gains from yesterday and still has a ways to go once it gets through here. It's, through this price point. So I think Geo continues to go, but we have a very clear $6.64 price point to see, can it get above that? The position's already in profit, already took profit earlier today, the remaining position's in profit. If it cannot get through, then we know to close the position. So doing this not only gives us which trades, but it gives me a very clear sense of where and when to exit them. Take a look at, let's see here. Let's try NEX. Here we go. Okay. Here we just have an all-time high. All-time high stock, great volume, broke through horizontal resistance. Simple as that. So this is a trade I would take whether we had found this method or not. This is a good trade to take. I have alerts set throughout. You can look at Qualcomm, for example, right here, and find where your lines are. So here, Qualcomm would have gone right up through here, right up through there. Look at that, acted as resistance right there. And then it fell back. You also have, bring it out, straight down from here. It's going to connect to the same candle right there. Come in right there. And look at that. Qualcomm is right in between. Bring this down just a little bit. Right in between these 2 points. Right there. So now I know I'm going to set an alert to the downside. If it crosses that, I will know we have a really good short on Qualcomm. Take a look at, let's see something that might be strong here. Let's see our old friend NVDA, right? NVDA. Here we have an example of, this would be invalidated lines, but a clear price point of 281. That is what NVIDIA has to get above for me to, based on this method, to go long. So we have our naturally occurring ones, we have crosses, we have the ones that are false intersects, all different types that we're experimenting with. So I know a lot of you are trying to replicate these lines, but no, this is a work in progress. What I do know is that the trades we have been taking, the trades that we've been using, for example, today we did short NVIDIA, right, on a lotto trade. And I think we got around $385 off that trade. We shorted it right around here. And we, let's see, what was it? It was right around, yeah, right around here. And we got, I don't know, $3, $4 off. I mean, that was just a great trade because I was confident we were below both the SMA and the Algo line. Now, sometimes you have a stock that broke through your price point, but it could have done it a day or two ago. That's the other thing I'm trying to figure out. How close to that price point break do you have to be for it to be a valid trade? Right? So there's yet another layer of analysis that I need to do to find out. The goal here at the end is going to be here's really clear instructions on how to find and create these algo setups. 2, how to identify the level of strength or confidence you can have in that setup. And then 3, what are the setups that you should be taking on any given day and ignoring the rest? So part of this is also a filtering process, right? To figure out, okay, these type of trades work best, these do not. And I would have to have clear technical evidence that I see the candles bouncing off the line several times. I see the volume there. And so at the end, you will hopefully have a very clear blueprint of what to do, because the ultimate goal here, remember, is if you're in a restricted account, the answer is to find the 1 or 2 premium trades every day. Meaning it doesn't matter what the market, you're in a trade that is so damn good that 9 times out of 10, you're going to make money on that trade. And how do we find them? And then once we identify how to find them, how do you scan for them? How do you locate those setups and those stocks? That, obviously you can go through charts all day, but wouldn't it be great to have, this is the setup I'm looking for, and then have your platform return it? So all of that is what we're trying to build. It's a lot. But I know that when we're done, we're going to have something that no one else has. An opportunity for people to make money that don't have money right now. Because the key to trading is identifying institutional direction. What are they doing? Because that's what you want to do. And you do not want to get faked out by the noise in the charts. Institutions are the signal. Retail traders like us, we're the noise. So how do we filter out that noise, focus in on what they're doing, and piggyback that? Well, we know they use algo lines. So identifying them is the first step. But it seems they may be using price points created by those algo lines. That becomes an even more powerful indicator. And once you have that, by the way, it mitigates so many other indicators. Because if you're breaking through an algo price point, you're breaking through a preset, where 3 different algo lines intersect, providing incredibly strong support or resistance, and a stock breaks through that, well, at that point, it clearly has relative strength. At that point, it clearly has all the other check boxes. By virtue of breaking through that point, means all your other check boxes are pretty much checked. So that clears up all your charts, everything, to just this identification of analysis. Now, once you get over 25K, you can now expand and take the other 20 trades, 25 trades that aren't premium but are good, because you can get in and out of them really fast. You're getting a lot of money just doing that. But here, we're focusing on those 1 or 2 top trades a day, and those are the setups we're trying to find. All right, everybody. I hope this was educational, and I will eventually get a description of this method into the wiki, but obviously we need to perfect it first. So in the meantime, there's still plenty in the wiki that you need to read. I still get so many questions, and the answer is always read the damn wiki. And you can watch videos too. So all around, it's just a fun, a good time, you know? Have the fam come. Also, you could sit around the fire and read the wiki, watch the videos, big popcorn. It's going to be great. It really, I know at first they're going to be like, what? No, you don't. But it's going to be great. By the way, I did toy around the fact with telling everyone that we have a special announcement that we're partnering with Wall Street Bets. But, it's April Fool's Day and all. But I figured that even goes beyond April Fool's Day to the realm of absurdity. And I know maybe some of you out there are just loving the fact that you're behind a Wendy's and looking at a dumpster fire and thinking, when moon? But unfortunately, you don't realize Wall Street Bets has done so much damage to people. You have a lot of well-meaning idiots there, I grant you. But you also have a lot of people who aren't so well-meaning. But overall, you know how much money people have lost in that forum? I mean, I talked to my person over at Ameritrade, and the numbers are staggering. Staggering how much money has been lost. It's just the people who have gotten wiped out following that direction of that sub. And it's heartbreaking to see and hear those stories. But they continue on. Sure. And little old us, we're just trying to figure out how to actually get people to make money. Okay. Well, I will talk to you all soon, and I hope you have a great weekend. Good night.